Hi there, welcome to Kneppy Invest and welcome to another question or answering question video. I recorded a 26-minute video question and answer or answer and question video last night. I think I'll just append that particular video to the end of this session just to make a longer video because I imagine this video would be probably about 45 minutes long. So let's get stuck into it and let's go back one day. So usually I go back to the most furthest comment I want to or question I want to talk about, but this is a really interesting, intriguing question or not question, a comment from Patrick C. Obviously, Patrick C. is a climate change denier. It's pretty obvious, but he made some really weird stretches, some really long stretches here, suggesting that the green investments being losers at the moment means that climate change is not happening. All the evidence of climate change, question mark. Then he goes on a bit of a rant talking about how green investments are losers. So obviously this Patrick C is a climate change denier. Now I refuse to get into debates with people who believe in conspiracy theories, and climate change denying is a conspiracy theory, because there's irrefutable science and evidence behind climate change. So if you don't believe in climate change, you're ignoring all that evidence, which means it's a conspiracy theory, just like flat earthers. All the evidence is saying the earth is not flat. Moon landing deniers. All the evidence is we've landed on the moon. If you believe or don't believe in the moon landing, then that's a conspiracy theory. Another one is those who believe there's a link between vaccinations and autism. It's been debunked. There was a paper written, I think it was 20 years ago. That's been debunked. It was a quack. That doctor has been discredited. In fact, the largest study ever, I think it was done in Europe, the largest study ever tried to, the scientific method states that there's one paper that proves a thing or something, then you need further proof on that. And so they tried to do this study with, I think it was the largest study in history, trying to prove that there's a link between vaccinations and autism, and no link. And then finally they realized that this doctor, I think, is made stuff up or something to prove a point. I have no idea, but he's been discredited. So these are all conspiracy theories, and because there's irrefutable evidence in regards to climate change, if you don't believe in it, it's a conspiracy theory, but it's okay. I don't think it's harming anyone unless you're getting paid a lot of money to put out information that's not right, incorrect information. And that's what oil companies are doing right now. That's not a conspiracy theory. Oil companies are spending a lot of money to spread wrong information out there. Okay, so I'm not going to try to prove to you why climate change is real. It's up to yourself to understand the science behind it, to understand why it is actually happening. So why do I believe that climate change is real? Well, the evidence, irrefutable evidence. We have mountains of evidence. I have seen the effects of climate change with my own eyes during my travels, during my studies. I've seen it. I've been to Alaska and other countries, and I have seen the effects of climate change. But when it comes to the facts, it's actually really simple. So we know that CO2, methane, water vapor, they are greenhouse gases. This is a fact. They are greenhouse gases. We can measure greenhouse gases. We've been measuring greenhouse gases, particularly CO2, over the past 70 years. In fact, one of those locations we are measuring greenhouse gases or CO2 is in Cape Grim. Here is Cape Grim's CO2 data since 1975. Straight up. There's a trend there, an undeniable trend. And one of the reasons why Cape Grim is really important is because it's on the western side of Tasmania, and that's measuring the flow of air coming over the ocean. So it's not really been affected by any man-made things. It's natural air. Well, all air is natural, but you know what I mean. The other area is, the place is Mauna Loa, whatever it's called, Mauna Loa. And they've got a nice little graph here as well. Here it is, nice little graph. I'll just zoom in on that. And I'm pretty sure they've been measuring it since the 1950s, CO2, atmospheric CO2 at Mauna Loa Observatory. Yeah, the late 1950s, and it's obvious. CO2 is going up. So why is this important? we know there's a link between the amount of CO2 in the atmosphere and temperature. It's a link because CO2 is a greenhouse gas. And if you do any sort of study in this area, any sort of research, you would know if there was no greenhouse gases or CO2 in the atmosphere, the temperature of Earth, the average temperature of Earth would be, what would it be, minus 18? Average temperature if no greenhouse gases. Minus 20 degrees. This is simple science. So we know there is a link. So if CO2 is increasing in the atmosphere, we know temperatures are increasing in the atmosphere, and we can measure the temperatures. So the link is there. So we have the evidence. All the evidence is out there. The one thing we don't know is the effects of climate change. We just don't know the effects. We can surmise the effects, we can model the effects, possible effects, but we just don't really know. That's the one thing we should be concerned about. We just don't know what's going to happen because we're burning all these fossil fuels. But we know CO2 is going up, temperatures are going up. So, and the other thing, I've seen the effects of climate change. So with my own two eyes, and that is why I believe in it. So you can believe in that or not. You can believe these crackpot ideas that climate change is not happening. Listen to those YouTube nut jobs out there, but that's not real information. The real information is the science, the data. That's the real information, the numbers. Always look at the numbers. But I do ask one question for you if you are a climate change skeptic. And to be honest with you, I'm a natural skeptic. I need information. I need proof, information. And that is what I have when it comes to climate change. But I have a couple of things to ask of you. Where does your disbelief come from? Question it. Just don't believe in something you hear on YouTube, because we tend to gravitate towards those YouTube channels, those opinions that agree with our own opinions and thoughts. Challenge your opinions. Always do it. And I believe in doing that myself. I will listen to flat earthers. What do you have to say? I will listen to people who don't believe that we landed on the moon. Why do you believe this? And once you start to question your own beliefs, you can come up with a well-rounded belief system. The other thing I want to ask you is, do you understand the difference between weather and climate? This is a massive pet peeve I have. And there is a distinct lack of understanding by climate change skeptics or deniers in the difference between weather and climate. And there's a distinct difference. In fact, there was a really good article, I think it was a conversation maybe about a year ago, in regards to this. And a lot of climate change skeptics will say after a cold day, what happened to climate change? I see this all the time. What happened to climate change? One cold day. That's it. That's weather. But what happens after a cold day? We have a run of really warm days, warmer than average days. In fact, this has been happening, I think in New South Wales, Queensland, the last few days, warmer than average. In fact, I believe, was it yesterday the hottest day on record? Hottest day on record. I believe this happened maybe yesterday or the day before. Hottest day on record broken twice this week. I mean, there's further proof. Monday was the hottest day record on Earth. But a lot of people are in bubbles. They have a cold day and go, well, this just proves climate change is not happening because I'm in a cold area right now. That is the proof I need. But they're living in a bubble and don't realize the world's pretty big. And you have to look at the whole world, what's happening all around the world. So just because we're having a cold day doesn't mean everyone else is. But climate, we're talking about climate, not weather. Climate is a snapshot in history. Climate is an average. You have to look at the average. That's the big distinction. And the average temperature is increasing. You might have one cold day in there every so often, but averages are there. And I've been looking at temperatures over the last 15 to 20 years, and we have significantly more warmer days than averages than colder days than averages. We continually break our warmest days on record. We never break our coldest days on record. It almost never happens these days. The signs are there, the evidence is there to back up climate change. So that's all I have to ask you. I won't change your mind because it's almost impossible to change someone's mind. They have to do it themselves. Okay, so I'm just going back to this particular, whatever it is, comment here. saying that if you believe in climate change, then obviously you're investing in green investments, which is not true. But I'm going to compare this to the .com. So this is what Patrick C says. All the evidence of climate change, Kneppy, that is the attitude that will lose mug investor a chunk of their hard-earned. Don't know what the link. What has to do with investments? The numbers showing green investments are losers with very few exceptions. Even Twiggy with his iron ore billions has a limit to how much green hydrogen loss he will stomach. The Chinese, Indians, and other realists fall into hydrocarbons with few limits, although you're completely ignoring that Chinese are taking up EVs by record numbers. So let's just ignore that. Okay, so let's go back in time. Let's go back 20 odd years ago. So let's go back to the late 1990. What was the boom thing back then? It was .com companies. And the majority of .com companies went bust. Yep, the majority of .com companies went bust. So according to your statement, that means the internet is not real. The internet is not happening. So that just shows you how stupid your comment is by saying, well, because these green investments are losers, that means climate change is not happening. Can you understand now how stupid that comment is? But so let's just move on past that and assume that's not what you actually meant. So what you actually meant was investing in green investments is not a good thing right now. Maybe that's a little bit of a stretch. Okay, so let's move a little bit further on and say, okay, so Amazon doesn't exist. Alphabet doesn't exist. What else is there? REA Group in Australia does not exist. All these companies are huge now because of the internet. So just because a lot of companies were not successful at the start of the internet doesn't mean later companies could not benefit and grow because of the internet. And just because some green investments are not working right now doesn't mean it won't be successful. These green investments won't be successful in the long run. It's going to take time. That is one of the most important things when it comes to investing. And what you are doing is taking a snapshot in history. You're saying right now, this is what happened with Twiggy. They're taking money out of their green hydrogen, whatever. So you're looking at one moment in history and extrapolating that, saying this is going to be the status quo moving forward. And that is not how the world and investing works. Now, you're also saying or suggesting that because I believe in climate change, I must be heavily invested in green investments. Well, that's a long stretch. I don't have any investments in green investments except one. And that company's doing really well, by the way. Doing really well. So very little of my money is in green investments right now. I put most of my investments, in fact, when it comes to climate change has no say whether or not I invest in companies. So a really weird comment here from Patrick C. But even though climate change deniers are fairly loud, there's few of them out there. And I would say, and this could be being a little bit unfair on the elderly population, but I wouldn't say most, but if you look at the demographics of climate change deniers, a lot of them tend to be on the older persuasion. And I wonder what psychology behind that is, but it does seem to be true in my own life. Most of the people I know who are climate change deniers tend to be on the older side. Anyway, so that's all I have in regards to this particular comment from Patrick C., who is obviously a climate change denier. And it's one of the weirdest questions or statements I've seen on my channel, which is saying something. Okay, so let's go back in time. Let's go all the way back to a question I want to talk about. So a lot of questions and comments. And we're going all the way back to, I'm trying to find the last question I talked about. So about 2 weeks ago. I should have actually looked at this beforehand. Thoughts on Sigma now? Nope. But what job am I doing? Star, SKS. Oh, geez, there's so much I have to do, isn't there? So many questions. Oh, yeah, I've talked about this. Okay. Yep, talked about that. Okay, so let's start with T Bandara 365 because this is a nice positive comment. This is the best investing education channel. Always challenges perspective and norms to become more proactive, well-rounded investors. Kudos to your dedication and insights. I just had to mention that. Thank you, T Bandara. No questions, anything to talk about there, but it's always good to get that sort of recognition. So John Channel does have a question. Do you think Zip is a buy now? Are you holding or thinking of buying it? I am trading Zip. Is Zip a long-term hold? It's not profit. Okay. So the way I judge whether a company is a long-term hold or not, it's all about quality of the company. Is Zip a high-quality company? No, it's not even profitable. So you can't really say Zip is a high-quality company. It does have a potential, maybe. So I just consider companies like this to be trading things because I have no idea if Zip's going to be successful. You can see just by looking at this particular chart, the sentiment in the investing community has turned positive since late last year. Beautiful downtrend, now beautiful uptrend. How long will this uptrend last? No idea, because again, in my opinion, Zip is not a high quality company. It's not profitable. Don't even think it's generating cash flow just yet. It does have potential, but it has a market cap of 2.3 billion. So it is fairly high, and they've just done a capital raising. So I don't, in my opinion, just my opinion, based off my investing strategies, Zip is not a long-term hold just yet. It might make it in the future, but not just yet. It's just a play or a trading play thing, and I am trading it right now because the chart is pretty nice. It's a nice looking chart, and I'm just going to ride. Oh, probably the best way to say it is I'm in this for a good time, not a long time, and it's a beautiful chart. So I'm just trading Zip right now. And the way I judge whether a company is a long-term hold or not is whether or not it's a high-quality company that can grow for a long period of time. And yes, it could be that eventually, but not just yet. Hi, Kneppy from Monogram. What do you think of MVP's financials and chart? Okay, this is, was it medical development something or other? Medical development. No, MVP, not that one. Medical developments. So there's just done a capital raising. Pretty sure, yeah, $10 million capital raising. They also released their Appendix 4C. So this is timely on the 26th. So this was on the Friday. This was yesterday, my time. And this is a company I've been following for a long time. I'm just been waiting for them to hit an inflection point. So they're still not operating cash flow positive. They're getting very close. $8.3 million in receipts. $34.7 million for the year, but for the year they were operating cash flow negative by about $11 million. So not quite there yet. However, I did read one of the announcements in regards to this capital raising, and they seem like they are heading in that right direction. But just because it seems like they are heading in that right direction doesn't mean they will get there. I probably need proof for this company, and or I need to see a bit of a shift in the chart. So the chart still looks a little bit negative. This is the weekly, that is the daily chart. I thought it was a weekly chart. So the daily chart still looks negative. I'm still waiting for a bit of a turnaround. You can see on occasion, share price goes on tears. So we saw one back in July last year, also January this year, but those sudden increases in share price don't really or haven't really amounted to anything. And we saw a recent little rally here, very small rally, back at the start of July, and since then the share price is going sideways. So there's a possibility the bottom has been reached, but I might have said that also back in late last year when the share price got to about 70 cents because the share price went on a run, the share price went sideways, and I thought, oh, maybe the bottom has been reached. So I'm not quite there with Medical Developments International, and I think if the company hits that inflection point of becoming profitable, operating cash flow, free cash flow positive, you will see a shift in the trend and the sentiment in the company's chart moving forward, but not there yet. And if you do look at the weekly chart, I say the share price is a long-term low. The last time share price was this low was way back in 2012. So this company has always showed promise. That's why I've been following it for a long time. I've been very close to buying some shares in this company, but I've never hit the buy trigger. And of course, I'm happy about that right now. But definitely this company is on my watch list. It's not on my watch list that I look at every single day, but it's definitely on my watch list for a potential. Now, I think this company has potential, put it that way. But again, the most important thing is just because a company has potential doesn't mean they're going to realize that potential. That is very important. So thank you, Monogram 63. C. Huntley, the next Promedicus or Promedius, curve beam, CVB, huge potential, in my honest opinion. Any thoughts, Kneppy? And apparently, I put curve beam at number 4 in the ASX Daily Rundown video on the 9th of July. The company does look interesting. So that's all I'm going to talk about when it comes to curve beam, because I talked about it in that video. So have a look at that video. I also left a link. And the reason I'm doing that question is because I didn't filter the comments that I have already answered. Sham G33, love to see a video on choosing entries into pullbacks, especially after big rallies. Thanks, Nep. Keep the content coming. It's one of the hardest things to do, pullbacks. What I probably should do a longer video on this. So what I do is I'll write it down, a longer video on pullbacks, because they can be tricky. And one of the things I do look for is sort of a decreasing volume as the share price pulls back. And also look for, what do I do now? What do I do? I'm not going to do a standalone video. If I remember, I'll do a standalone video. So let's have a look at one of the companies that I am trading right now. What's a good example? Let's go to my lists of companies. What's a good example here? Let's have a look at Southern Cross. Now, I have to look at the daily chart, though. And Southern Cross Electrical Engineering is in a well-defined uptrend. There's little doubt about that. And so I've bought on 2 occasions, $1 when the share price broke out, about 95 cents. And then I bought on the back of a nice little announcement. Didn't quite buy the pullback. So the pullback didn't really pull back all that much. But as soon as the share price moved into my support zone, which is this shaded green area, the share price took off. And it's just done it again like a week ago. Poured into the support zone on the 22nd of July and then took off on the 23rd of July. On that particular day, it rose nearly 10%. And you see this quite often. So let's go to 360. So this is another case where the share price pullbacks and it takes off when it moves into the support zone. This was a little bit dicey, this little pullback in the middle of June. So sometimes you don't time it perfectly. What's another one here? Superloop. I'm pretty sure has been doing it as well. Share price has been riding the short-term moving average channel, which is this shaded green area. And the most recent pullback was a little bit more distinct, a little bit sharper than what we've been seeing. What's another good example? GQG. This is the perfect example. Share price, every single time share price gets into the short-term moving average channel, it's a buy. But eventually, when the share price gets into the short-term moving average channel, that's it. The uptrend will come to an end eventually. So not all these dips will be buys. So that's what I'll talk about when it comes to choosing entries into pullbacks. That's exactly what I look for. Little pullback into the buy area. And then also look at volume. If I see weak volume as the share price pulls back, that's a fairly good sign. I also have a buy the dip little screener. So what I'm looking for here is I use RSI, pretty sure I use RSI, yes, RSI, and a moving average, 20 moving average above the 50. So I'm just looking for a share price that is in an uptrend, a little pullback, which is the RSI. So let's have a look at a few companies here. Only 41 matches apparently according to this. So Whitehaven, is this a buy the dip situation? It's a pretty big dip. Webjet, is this a buy the dip situation? Possibly. Regis Healthcare, another company I've been following. Is this a buy the dip situation? It's dipped, and I think this could be a possible buy. Navigator Global, is this a buy the dip situation? Oh, I don't know. Don't know. Pantoro, buy the dip situation? No, let's clear with that one. So I usually look for share prices moving into support zones, resistance areas, or support areas or zones. Also looking at volume. So that's what you're looking for. Hopefully that's answered some of your questions. Hopefully. Blind Sly Glide says, thanks for today's update. You're spot on. Not everyone's portfolio was green. Supply network pulled mine into the red today. But since I'm currently enjoying the tranquility here in the PE, Tahitian Islands, Malaysia, I think I can live with it. And I'm assuming 9 Slide Glide, you had a great day on Friday because Supply Network released their preliminary results or something. Was it non-audited results? And the share price rallied 9%. Preliminary earnings forecast June 2024 and final dividend. And if you look at the share price and the chart for, this is a really good, by the way, this is a really good buy the dip chart or share price or company. And in fact, what I would use with this one is a longer term moving average channel. It does it all the time. October 2022, March 2023, October 2023. It did it in January 2024, and it just did it in July, middle of July. The share price dipped into that long-term moving average channel and took off again. I wish I had this on my watch list at that point in time because this would have been a great buy the dip situation with Supply Network. So obviously, you are loving life, maybe. Where's it? Here it is. 9 Slide Glide. Method 341. FBR has been a dog for years, but every dog has its day, and I believe it has finally come. I will open a position in this week. I reckon they will do a capital raising, but that's okay. There is a lot of potential around this company, but again, just because there's potential, for those who don't know, FBR is the Fast Bricks robotics company. They sent a boat to the United States, I think it was Florida, and one of the machines was taken off the boat recently, I think. Hadrian X arrives in the United States, and the share price has been on a bit of a tear. There is a bit of there's a bit of that promise already built into the markup. Markup is about 200 million, and this is a buy the dip situation, possible situation. You can see it just bounced off the short-term moving average channel almost perfectly on the 23rd of July. But again, I think this is more of a trading stock. It's more of a story stock for me. Just now, I need a little bit more proof in regards to whether this is a sustainable business model moving forward. But then it comes back to your risk tolerance. If you're more willing to take the risk on a company like this because you think that promise has a greater chance of being delivered than maybe what I think, probably or possibly now is a good time to buy some shares in FBR. So again, it all comes to your risk tolerance. I'm a little bit more risk averse when it comes to these sort of companies, these story stocks. But hopefully, FBR does become a winner for you. Method 341. Stocks under the hood. I took a position in SKS at the open 2 on the back of that announcement. Exciting company. That was on the 8th of July. And SKS Technologies has been a bit of a winner for me because I bought on a nice little announcement. What was that? The 8th of July. Yeah. Bought $1.04. I was shocked. The share price only up 4% on that day. And the share price has been on a run since then, up to $1.63. Really good volume coming in. Always look at volume. What I've really found interesting about SKS Technologies in the past 2 weeks is a lot of buying comes in whenever the share price falls below about $1.60. You can see that with these long shadows on the one-day candlesticks. Some really long shadows, which tells us there's a lot of buying pressure, a lot of enthusiasm in the buyers whenever the share price takes a little bit of a dip. And I've been questioning the sellers, why are you selling at these levels? Because in 4 or 5 days in the past 2 weeks, whenever the share price gets to these levels, there's buying coming in. So don't sell your shares when the share price gets to $1.50 because more than likely there's buying. And just the chart looks brilliant. I do know there are some detractors around this company. Particularly when I looked at this company first, many years ago, they were like an audio-visual refurbishment sort of company. So my first video on this company was done, August 2021. One for the watch list, I said. And then I did another video December 2022, profitable microcap. So I actually done a few videos on SKS Technologies. And back when I first did a video 3 years ago, it was a little bit of a different company. Now they're really into data centers, that sort of thing, and that's where the growth is coming for this company. I'd just like to see the margins, but the market is aware of this company, and that's why the share price has absolutely taken off. The share price broke out on the back of a data center announcement back in November last year. That was a breakout for this company. Before then, share price did nothing. So I'm pretty sure this is one of those AI data center stories. And Who knows how long the story has to go for SKS Technologies. They keep releasing really good, strong announcements. So thank you, stocks understood. Swimming 11, hi Kneppy, any thoughts on the moves of Star? Seems to be holding. Okay, yeah, this is definitely one on my watch list, and I keep talking about this company. And I have been thinking about taking a sneaky position in Star just because I think there is a chance the low has been reached. And there is a chance that we're in a consolidation phase. And the only reason I'm not buying any shares just yet, and more than likely any position would be small, is because there is potential the consolidation period might last for a while yet. Could last for another year, 2 years. Maybe I'm just waiting for a breakout, and the breakout might happen. The share price could increase 10, 15% in one day, but I'm willing to maybe not get that gain beforehand because I just don't know how long the share price is going to go sideways. But definitely, Star Entertainment Group is on my watch list. A company I am following every single day. There it is in my everyday watch list called Bye Bye Australia. So I look at this chart every single day. I'm looking for announcements every single day. And if I do see a positive announcement from the company, I more than likely will, that will be a trigger for me or catalyst for me to take a position in this company. So that's Star Entertainment Group, pretty much a dog stock, unhated company, or not an unhated company, a hated company on the ASX, but the market can take a while to change your opinion, and that's when we can benefit from that. A great probably example of this would be Integrated Research. This company was hated not that long ago. There it is, hated. Fairly long, well, maybe not that long consolidation period. So I bought at 37.5 cents. I was preempting the possibility of some good news coming forward, but I thought I might have had my position for a while, but it wasn't. It was like a month and a half before they released the really good news and share price. Look at that, beautiful chart. Beautiful chart for Integrated Research. So there's quite a few companies out there like this that are really hated by the market, and if they can turn things around, then the share price is really low and the company is undervalued. And again, a great example of this is Gentrack. The share price of Gentrack fell below $1, I believe. Look at this chart. Yet fell below $1 in March 2022, went sideways for the longest time. And I took a position in this company back in late 2020. I held it for the longest time, like 2 years, 2 or 3 years. And I was just waiting for the breakout, and eventually the breakout happened on a good, positive financial news, and that's all I had to wait for. But I held all through this period, just waiting for that breakout, and eventually happened in late 2022, and the share price has almost 5-bagged since then. This is the beautiful looking, one of the most beautiful looking charts on the ASX right now. And not only that, there's more people mentioning Gentrack. It's more in the news. Back then, in 2022, no one cared about Gentrack. It was a hated company on the ASX. So things change, and they can change. And one of the benefits we have, advantages we have, is we can get in before the crowd. Neuron Pharmaceuticals, I got in well before the crowd, 2 years before the crowd. And we can do that well before the crowd. It really amazes me when a company is brought up on AusVisiCore and the expert goes, I've never heard of this company. And I'll just go, what? How can you not have heard of this company? In my opinion, experts should know. Well, I'm being a little bit unfair because it all depends on their investing strategy. Like Team Invest, they only buy companies that have been profitable for like 5 or 10 years. So obviously, they're not going to really care about small companies that are not profitable. But I still think it is wise, even for those investors, to know about these small companies because these could be the big companies of the future. That is the main reason I pay attention to these smaller companies because they can be huge. They could be the big companies. They could be the giants of the future. What's that podcast, Baby Giants or something like that? Yeah. James Nicolo says, FBR question mark. They are short on cash, will probably raise capital soon. Okay. I've already talked about FBR, so I won't go into that at all. Okay, what do you do for a job, mate? Yes, I'm a meteorologist. Do you have the right amount of O's in there? Yes. So meteors is not the study of meteorites. It's a study of weather, which is Latin. I'm pretty sure Latin meteor is things falling from the sky. I'm pretty sure that's right. Things falling from the sky. Meteor, Latin. I think it's Latin. Meteor, the word meteor is derived from the Latin meteorum, from the Greek meteoron in its pure form, meaning atmospheric phenomena or anything in the heavens. I thought it meant falling from the sky or something like that. So we study things that really fall from the sky because that is weather. We don't care about sunny days at all. Well, you might, but I don't. In fact, actually, no, I was going to get a little bit too technical there. Anyway, so meteorology, study of weather. It's not climatology, which is a study of climate. I have no expertise in the study of climate. I've worked with climatologists. It's a completely different, well, it's not completely different. It is a different science. When I do weather, well, the job I do with the Bureau of Meteorology right now is forecasts that are valid for a day. One day. Climate, we're talking about years, decades, centuries. That's what we're talking about. Weather and climate are sort of related, but they're actually quite distinctly different. What drives the weather is different than what drives the climate. Okay, so that's meteorology, yes. And I'm part-time. Possibly next year, I'll have a year off. No work. I have applied for that, and hopefully that will be successful. And there is a possibility, if I am successful with what I plan to do next year, 2025, maybe I will become retired. Don't know. Probably a 10% chance. I do like working part-time. I think it's a great balance, an absolutely amazing balance for me. Are you able to please tell me what criteria you use to determine if a stock is breaking out? Many thanks. Okay, I can actually answer that, even though you probably should have put it in a different question. Yeah, it's actually, this is fairly easy. Let's have a look at a breakout. Why, we've got Gentrack. This is a breakout, a beautiful breakout. Well, actually, it's not the best breakout. What's a really good breakout? What's a really good breakout? Gentrack is a good breakout, but I want a different company. Let's go to a company called, 360 is a good one. 360 is a good one. Yeah, it happened recently. When I say recently, maybe 4 months ago. This is me buying on a breakout. Okay, so how did I get into this position? And the position is up about 40% right now, something like that. So on the 1st of March, was it? 1st of March, Life 360 released an announcement, a financial announcement. Let's have a look at that announcement. 1st of March. This will probably be my last question, by the way. 1st of March. Where is it? The calendar year 2023 results. Okay, so that is, in my opinion, and not an absolute necessity, but is an important requirement for my favorite type of breakout. Share price increasing on positive financial news. So share price on this particular day rallied 38.5%. And I bought at the end of the day because this was a really powerful one-day countertick. The other thing I look at is volume. I need to see a really big volume coming in. And undoubtedly, there was massive volume coming in on this particular day. So positive financial news, increase in volume. The other thing I look for is I used to be at least a 6-month high. Sometimes I will be 3-month high, but 6-month high. So I'm looking for a 6-month high because I don't want resistance. So if the share price of Life 360 had fallen, was in a big downtrend, they released this, there would have been much more resistance, much more selling, because don't forget, this is very important. A lot of investors, when they buy stocks or shares in a company, they expect the stock price or the share price of that company to rise immediately. And if it falls, they almost immediately, assign that company as a dog stock. They think of that company as a dog stock. And their thinking is, as soon as the share price goes on a run, rallies back up to where I bought, I'm going to sell. That's resistance. That's why I'm looking for a company getting to at least a 6-month high, sometimes a 3-month high. But for Life 360, that was a multi-year high. Multi-year high. It was a 2-year high. So there's less resistance. So all these shareholders who bought back in late 2021, they've probably already sold. They've gotten out. They got bored, or they sold on some of these rallies. So there's much less resistance for Life 360. I don't care that the share price rallied 39% in one day. It's irrelevant. I've bought companies whose share price rallied over 100% in a day and then still made a 5, 6, 7 bagger. So this was a classic case of a breakout. Financial news, share price increasing a lot, 6-month high, high volume. That's what I'm looking for, and that's what I'm looking for every single day. And a lot of these cases, although looking at my trading portfolio, a lot of these cases were not breakouts on positive financial news. They were just breakouts. For instance, COSOL. Well, this wasn't technically a breakout. The breakout was brought down here somewhere, here. So I was late to this one, but the share price kept on rising, and I was waiting for share price to get above about 90 cents or so, 92 cents, and then it did it. I was a little bit late, and I bought at 96.5 cents. Shape Australia, perfect, beautiful, shift in sentiment, shift in trend, no financial news, but the share price rallied, started to rally, and I bought when the share price got to a 6-month high, that sort of thing, and the share price has kept on going. Superloop was a positive financial announcement. There it is, me buying 80 cents. It took a market a while to digest the news. That's why the share price kept on rallying. A takeover bid as well. And it's also a successful contract with Optus. I think it was Optus. No, Origin. Origin Tours. I can't remember if this was on the back of financial news. No, just the share price getting to a new high. I think this was an all-time high. So don't be afraid to buy shares that are all-time highs. Lower resistance, less resistance. Fisher Paykel. I'm pretty sure this was on the back of good financial news, 22nd of March, results or something. But it took a while before the share price started rallying. Southern Cross. This was not on the back of financial news. This was on the share price just breaking above a nice little resistance level at 96 cents. Bought at $1, round number. And the share price taken off. Okay, so I can keep on going on and on. And yeah, so financial news, not an absolute necessity. Volume is a necessity. I want to see the higher than average volume, particularly if it's on financial news, positive financial news. The other thing I look for, for instance, when I'm buying a breakout, not on financial news, I don't need to see the volume on that day, but I need to see the volume increasing afterwards. And you can see with Southern Cross Electrical and Engineering, the volume has really exploded the last 9 months. So if you go back when you go very low volume, share price going sideways, but the volume has really expanded, really blown up the last 8 months. That's a good sign. That means fund managers are getting interested in this company, and fund managers really ideally are the ones who are going to lead the share price higher. You need the fund managers interested. What's a good example of volume really expanding? Is it GDC? I can't remember. No, not that one. Numerous examples of volume really expanding, but it actually doesn't have to happen on that day unless there is a financial announcement from the company. Global Standard. This was a good case of me just being fortunate. I bought on a little breakout, which wasn't on the back of financial news, and then the good financial news came 4 days later. That was just fortunate timing. Doesn't always happen. Anyway, that's what I do. Okay, that's a breakout. Okay, and that's all I got for this particular video. In my next answer and reply video, I'm going to, well, maybe not method 341, talking about a very boring day. 741 PB. What are your thoughts on Drone Shield now? Well, this is a little bit late right now because this is 2 weeks ago, and since then, Drone Shield share price has gone all the way up and down like a yo-yo. Anyway, so that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye. Hi there, welcome to Kneppy Invest, and welcome to another shortened answer and reply video. Maybe I should have called this questions and answers, but done and dusted, the naming of this series, my second favorite series, answers and replies, and I thought I've got a little bit of spare time on my hands right now after a fairly busy day. It's about 7:15 p.m. on a Friday evening. I do plan to do another of these videos on Saturday afternoon, so I'll probably make this about 20 minutes long. So let's get stuck into it and go back 2 weeks ago to Joseph Ackle. Really enjoying technical updates, daily ASX report, and top 5 picks. Been investing for the last 4 years. Congratulations. And my advice, even though I can't give advice, would be stick to it. Stick to it. If you've been investing 4 days, stick to it. 4 months, stick to it. 4 years, stick to it. 40 years, stick to it. Investing is a great way to increase your wealth and to eventually retire, hopefully. And including technical analysis, make a turnaround in my portfolio. Question 1. In TradingView, how do you scan for unusual volume or volume increase? What's your motivation behind running? And do you park run? So 1 investing question, 1 personal question, and I do like personal questions. Makes me seem more human, or humanize me, maybe is a better way. Just heard some noises there, but it's okay. It's probably my dog lying down, taking a nap, something like that. Anyway, let's get to the first question. In TradingView, how do you scan for unusual volume or volume increases? I'm pretty sure I've gone through this before, but it's always good to refresh. Now, in TradingView, down the bottom, there should be a stock screener. And I know I've mentioned this a few times on this particular series, is because I always, not always, but I tend to mess up the wording, the how to say this. I always want to say SKOC or stock screener or SKOC. I don't know. I've got what's it called? There is a word for it. Spoonerism. Spoonerism. I am inflicted with Spoonerisms. Here we go. Personalizing myself. Spoonerisms, a verbal error in which a speaker accidentally transposes the initial sounds or letters of 2 or more words, often to humorous effects. And it is actually often to humorous effects if I do it and people hear it. They go, funny, funny, funny. As in the sentence, you have hissed the mystery lectures. Yes. So that should be, you have missed the history lectures. And that's something I would do. Anyway, it's named after Lord Spooner, who would do this a fair bit. What is the difference between Spoonerism and malapropism? Yeah. I don't know what malapropism is. Anyway, I'm getting off topic here. So stock screener is found at the bottom, and that's what you have to open up. And then I have a few screeners in here. And which ones did you want? Unusual volume or volume increase. Now, I think unusual volume is one I've developed myself, but down below there is a volume leaders. So let's open up my unusual volume. And for instance, today I have 22 matches. Now this is based off my own filters, so not many companies. And at the top we have supply network, which makes sense. Top stock of the day, really good volume coming in. And the main reason really good volume has come in is because people saw the profit upgrade and they wanted to buy it. Coming in number 2, we have BSA. And this is listed by, actually, no, Supply Network, there is. Coming in number 2, we have Austin Engineering. Some good volume coming in for that company. I'm pretty sure they released a pretty good report. Yeah, today. They did an update today. Austin Engineering, and I completely missed it. And Empire Energy, another company who had good volume today. However, the one-day candlestick looks pretty nasty. And Ansarada Murray Cod. So the filters I have in this one is relative volume above value 2. So I want double, I'm assuming this is what it means, double normal volume. And I'm not sure what that length of normal volume is. So I want at least like a month worth of data here. And if the volume in one day is double the normal volume, the average volume per day, I want that to come up on my filter. Also, 3-month high. The reason I'm doing a 3-month high is I'm looking out for breakouts on high volume. That's the reason I have this filter. Breakouts on high volume. So let's go back to Supply Network. Does this, this one is very close, if not a breakout on high volume. And Austin Engineering. Yeah. Well, it's not technically a breakout because the share price is in a beautiful uptrend. What I'm really looking for is the share price going sideways and then starting to go up, because that is a really powerful signal. When the share price is consolidating and the share price takes off, that's probably the most powerful signal of a breakout, most powerful type of breakout anyway. So that is my personal unusual volume filter. You can play with whatever you want. And what's the other question? Oh, volume. Okay, excuse me. I should have brought some water across, but I didn't. What's your motivation behind running, and do you park run? Okay, so I actually got injured in February this year. I actually injured my what do you call them? The stuff on your leg. I'm not sure exactly what I injured, but the thing that connects your body to your leg, there is a word for it, which I completely forgot. That's another thing I happens to me sometimes. I completely forget words, and then I remember it few moments later. Anyway, so I have started running again. This morning I ran 5Ks. So for some people that might sound a lot, some people might not sound a lot, but I had been running over 100Ks a week, and for about 10 years I did not get injured once. So this is a relatively new injury. Haven't really experienced this before. Now, I started running. I tried to start running well over 20 years ago, but I failed. And then this was when I was living in the United States. Then I came back over to Australia the weekend of the city to surf in Sydney. Now, I have a lot of family living in Sydney, and I decided, I told them, uh, join me up, sign me up to city to surf, 14 kilometers, and I hadn't been doing much running or even walking. It took me about 2.5 hours to do 14 kilometers, and I could not walk for a week later after that. It absolutely destroyed my legs. And which is really funny because over the past few years, I could run 14 kilometers a day and not be affected. Even now, I could walk 14 kilometers in one day, take the dogs for 14K walks all the time, no issues with my legs. But as we move forward, I really didn't get into running, but I was going to the gym. And sometimes I would try to run on the treadmill, and I hated running on the treadmill like nothing else. And I couldn't last very long. And I just thought to myself, I'm not really built to run. So one of the things I would do was use those, not the rowing ones, the whatever you call them, the ones you go like that. And one day, uh, I forgot my card to enter the gym. My gym is 3 kilometers away. And I thought, instead of driving back home, I'd just run home um, and pick up my car to enter the gym. And I did it. Then I ran back to the gym. So that's 6 kilometers I ran. And by the time I got to my gym, I went, I easily handled that 6 kilometers and I enjoyed it. And that's the first time I tried to run outside of a treadmill. And I hate running on treadmills. I still hate running on treadmills. I don't know what it is. There is a massive difference between running outside and running on treadmills. And that is the last time I went to the gym. And ever since then, I bought some gym stuff to put in my garage to do some lifting, that sort of thing, strength training. But ever since then, I've been a runner. This was in 2012. Then I did a marathon 2014, 2013, 2000. Yes, I did a marathon a year after I started running. 2013, 2014, also did a marathon at 2016. And the last marathon I did was 2017. I signed up to do a marathon this year, but I injured myself and I had to unfortunately skip it. A Gold Coast Marathon. Last time I did a marathon in 2017 was the fittest I've ever been. I was so fit, extremely fit. I did the marathon in 3 hours and 12 minutes. Yeah, 3 hours. There's no way I could do that right now. In fact, my 5K run this morning took me 40 minutes. So just think. So marathon is 42 kilometers, which means I was running 42 kilometers. I was running about 4.5 minute kilometers. This morning I did 8 minute kilometers. So significantly quicker 7 years ago than I am now. But I'm not as fit now because I've been injured. I just love running. I hate riding bikes, particularly pelotons. I don't like doing stuff with other people, that sort of things with other people. On occasion, I have run with other people, but very rarely. I'm the sort of person who could, that guy who wrote the book, who lived in Massachusetts in the wild for a while. What was his name? Thoreau, Henry Thoreau. I'm pretty sure it's Henry Thoreau. I could be completely wrong. Henry Thoreau wrote a book about it. I forget what it's called. Henry Thoreau. What was that book? What was the book? Walden. So he lived in the Massachusetts wild. near Concord. Just experienced what it was like or something. I actually have never read it. I've just heard about it. And I probably could do the same thing. I could live by myself in the wild for a year and it wouldn't bother me at all. I'm an extreme introvert. And when I say introvert, it doesn't mean I'm shy or anything like that. It just means I lose a lot of strength, a lot of energy by being around people. It's just me. And I can be by myself for a long period of time. It's just me. And that is one of the things that attracts me to running, that I love running by myself or with the dogs, if the dogs are running. One of my dogs I won't take for a run because he's getting a little bit older. And I think I don't want to take him running because he's getting older. But I love running with dogs, running by myself. And back to the question, do you park run? I love doing park runs. I haven't done a park run ever since I've been injured. My fastest park run was 18 minutes and 12 seconds. And this was back in 2017 when I was really, really fit. And I have one park run maybe once or twice. Yes. So I think it's 18:12, my fastest park run. And to be honest with you, breaking 20 minutes at park run is one of the most amazing, well, maybe not amazing achievements, but it's an amazing feeling. Still remember the park run where I broke 20 minutes. And wow, I'll always remember that park run. It was done on the Sunshine Coast at Karawana, something like that. Yes. So, yes, I do park run, but I haven't done it for a while. So thank you, Joseph. That answer went on a long time. Neil Weston says, greatest work I have ever seen. Have you seen the Mona Lisa? I have in person, and it's small. So small, but if I own the Mona Lisa, and would I describe that as the greatest work? No. Mona Lisa, definitely not. I just think it's the most renowned piece of art. Art, the whole point of art is to evoke emotion. When I see the Mona Lisa, the only emotion that evoked within me was outrage and disgust because it's in the Louvre in France. And the line to see the Mona Lisa, so it's a very small painting, and you just have a massive crowd of people around the Mona Lisa. So that's my memories of the Mona Lisa. So I wouldn't describe it as the greatest work ever because of that one emotion, but it's the most famous piece of art ever. And yeah, art, whole point of art is to evoke emotion. I love music because a lot of music evokes emotion. And I like listening to music that could be considered depressing. And one of the reasons I like listening to music that could be seen as depressing is because it evokes the sort of emotions I don't usually feel. I'm a typically very happy sort of person. I don't feel depression. I don't feel sad all that often. And sad music just makes me feel stuff I don't usually feel. And so that evoke emotion. Watching movies, any type of movies that evoke emotion, any types of emotion. So art is all about evoking emotion. So would I describe any of my videos as art? Well, some of you might be evoked with emotion when you watch my videos, but I wouldn't consider any of my videos art because the whole point of these is not to evoke emotion. Now, actually, another point about art could be not only evoking emotion, but evoking thought. So that's something that has popped up on my mind recently is I've always thought art evoking emotion, but what about evoking thought? Some songs can evoke thought, poems evoking thought, literature evoking thought, movies can evoke thought. So that is something that I have been maybe not grappling with, but thinking that the whole point of art for me has always been about evoking emotion. How about evoking thought? Anyway, I'm just rambling on. This is what happens when you've had a busy day. Alastair James says, good video, Kneppy. Thank you. You're welcome. Oh, NZBRG. Excellent video, Kneppy. Thanks. I wish I had time to watch more of your videos. Develop a time machine or an anti-aging, and then you have all the time you need. And before you tell everyone, just tell me first. Pioneer credit has quite high net gearing, but nice chart. I actually did notice the Pioneer share price had pulled back a bit the last few days. So let's have a look at the chart. This could be just noise. More than likely, it's just noise. Yeah, I think it's just noise. And I do, yeah, I do sort of understand the leverage, but I think in this type of company, they need a little bit of leverage to get that debt. But then if you compare the debt to the assets, which is the debt they have, um, they want to collect that debt. I think it's probably comparable. Now, I did compare Pioneer Credit to Credit Corp, and if I had to choose either of those two companies, I'd probably lean towards Credit Corp in terms of quality, but I'd choose Pioneer Credit in terms of valuation. So valuation does matter. Although Credit Corp, if you look at their chart, much worse than Pioneer Credit, but potentially more of, I don't know. Anyway, I don't know. It's an interesting comparison. It's not the sort of companies I'd like to invest in, but when I do see value, I don't care about the company or what sort of company, what sort of business model it has. But yep, definitely has a high net gearing. USO like me, oh, New Zealand BRG to one doing a lot of replying. USO like me, Kneppy. I don't like crowds of groups of people, but a few close friends or people individually are fine. Yeah, individually, people individually are fine with me. Yes, as they say, and maybe you've never heard this before, but if we took the time to get to know someone, more than likely we'll like that person. And I sort of actually agree with that. It's probably why a lot of arranged marriages work, because if you get time to know someone, more than likely you get to like them. And I think a lot of reasons people break up in relationships is they don't have that passion, or if they did have that passion, they've lost that passion, or sometimes people are just too passionate about each other that they drive each other crazy. Oh, another one from New Zealand BRG1. Maybe Brett Blundy wanted some tax losses. Okay, yeah, maybe. Have I been liking these? Yep, I have. Okay, Jake Barry, great info game. When talking about commodities, what's your opinion on producing exploration companies versus the commodity itself? And further, using gold as an example, what are your thoughts on the different ways to own gold on the ASX? Gold, PM Gold, or holding an exploration company like SXG? So this will be the final question of the day. I was hoping to get through a little bit more, but I am not a fan of mining, not a fan of commodities, because mining companies are price takers, and commodities is all about supply and demand. And eventually, when there's an oversupply, eventually there will be a catch up, um, with the price will fall. So, yeah, okay. So just imagine a scenario where there's an oversupply of a commodity. So there's too much iron ore. What do you think is going to happen to the price? Price will fall because it's too much. So again, price takers, and the price falls and falls and falls, keeps on falling. A few iron ore companies become unprofitable. They shut up shop, maybe go bankrupt, that sort of thing. So eventually the supply dwindles, but demand stays the same. Maybe demand increases as the price falls. There's that possibility as well. So demand increases, supply falls, and eventually we become imbalanced again, but on the opposite side. There's more demand than supply. So what happens to the prices? Prices start to rally, supply and demand. And eventually, some companies, this has happened to uranium recently, over the last few years. So eventually, some mining exploring companies who are exploring, let's say they're exploring for titanium or lithium, and they see the price of gold rising, or iron ore. I was talking about iron ore. They see the price of iron ore rising and say, why are we exploring for this other commodity? Let's go into iron ore exploring. The price is rising. Price is rising. We got to rush into that sort of exploring. So eventually, you see those mines that were in mothballs, they go back into production. Exactly what we're seeing in uranium right now. And eventually, the supply starts to increase, and then we get the whole cycle again. So mining is very cyclical, extremely cyclical. It's all based off supply demand. Yeah, so that's my opinion on commodities, producing exploration companies. Have a look at the Lassonde curve. This is a really good chart when it comes to Lassonde curve. this tells you about the sort of the life cycle of a mining company, starting from when their exploration all the way through to they die or something. And it talks about that the initial excitement in a mining exploring company is when they're doing exploration or drilling, that sort of thing. And so you get this exploration, then they get to discovery. And then there's a period of time when the interest in the company wanes away, called the orphan period. And then they go into mine construction, and then you see the share price starting to rise again. And then they get into production, and that's the revenue generation, sort of the top of the cycle again. And eventually mine closure at the bottom of the cycle. And that could be 1 to 100 plus years, because some mines life lasts maybe 100 years. Yeah, some last a few years. So the Lassonde curve tells you all about that, the life cycle of mineral discovery. I am not a fan of any type of mining company. And I've come to this realization later. There's just too much. They're too much of a story stock. There's too much day trading in it. And I understand day trading because just take one example. What's a good example recently? Let's have a look at, I do have a high volume spec. Let's have a look at Australian gold and copper. And just a lot of, so if you bought into Australian gold and copper when it first started breaking out, you've done really well. In fact, the share price really started breaking out in about November last year at about 6 cents. And the share price went to a high of 60 cents. So a 10 bagger over a short period of time. But then the day traders got interested in this company. They really got interested probably in April, became very interested, a lot of day trading. And when there is day trading, I have no idea which way the share price is going to go. No idea. I just don't want to read these sort of charts on this time frame. And when I'm talking about time frames, I'm talking about 1 hours or less, 1 hour charts or less. So you just need to spend a little bit more time. And whether Australian gold and copper makes it becomes a producing company, I have no idea. I think you do need to be a bit of an expert, a geology expert, to get an inkling of or even understand these type of companies. So I'm not the biggest fan of mining companies. That's probably put it that way. I'm not a fan of even holding the commodity itself. I know some people don't like to own the commodity because it's not income producing, and that's an absolute truth. If you own a bar of gold, it doesn't produce any income. There's no dividends, nothing like that. Now, in saying that, that's not the reason I wouldn't own it, because over time, gold, that bar of gold will increase. It will appreciate with time, and it's a store of value. But I just don't have any interest in that. I do have some Bitcoin, by the way, which could make me a hypocrite, because difference between gold and Bitcoin, is there much difference, to be honest with you? Bitcoin is a store of value. Gold is a store of value. So maybe I am being a little bit hypocritical, but there's a few other reasons behind that. Or holding an exploration company like SXG. Now, this is a case of an exploration company that is being successful. I think someone did mention to me that that's the 1 hour chart, by the way. In fact, the 1 hour chart looks like it's turning down. Someone did mention to me that, I think it was Southern Cross Gold, maybe it was something else, that Southern Cross Gold is or we should wait until Southern Cross Gold gets into the orphan stage. And that's when, or just before it moves into production or starts mining construction, that's the time to get interested. So maybe Southern Cross Gold is moving into that. Maybe it's reached its high and the share price is starting to go down. So just think of the Lassonde curve with Southern Cross Gold. I could be a little bit mistaken. So overall, I'm not that interested in mining companies because they are price takers. They are beholden to supply and demand. Now, there will be some management teams of some mining companies that will do a good job, but even then, those mining companies are still beholden to the price of commodity, and it's all about supply and demand. One of the reasons I have heard why rare earths or Linus is not doing well is because China is flooding the market with rare earths because they want to suppress the price of rare earths. I just heard that the other day. That could be true. That's exactly what you would do if you want to suppress the price of a commodity. You flood the market with that. If you read the past, people have tried to do that, and I'm thinking the early 1900s, late 1800s, when people try to corner a particular commodity by either flooding the market with the commodity or doing the complete opposite. I have heard stories about that, and it's all about supply and demand. And there's other companies, non-mining companies, that are beholden to supply and demand. Agricultural companies, pearl companies. So these are commodity-based companies, supply and demand. Anyway, that's all I have for today's answer and reply video. If you have any questions, any thoughts, leave them in the comment section of this video, and eventually I will get to them. I promise you. Anyway, that's all I have for this particular video. Have a good day. Talk to you later. Bye.